Hey, what's up, everybody? Hey, what's up, everybody? It's Ted here, Bodies and Wicks. The reason I just wanted to start getting this filming is because I think earlier we, have been seeing Bitcoin going down and down and down. I think we finally saw it hit a temporary bottom, meaning that I have a feeling that this will go up, um, probably, hopefully, to around the 34, 35-ish area. I mean, hopefully higher than that, but at least in the interim, at least up in that way, at least above this high here, which is by around 33,170. But I do have some pretty good faith we're going to end up in this area here, hopefully somewhere around 3,400. Which is around the top of this box that I drew, which I believe was a 15-minute fair value gap. Let me just double check. Maybe an hour fair value gap. That may sound more like it. Yeah, it's an hour fair value gap. Because these two candles rebalanced, leaving this one open. And here you have equal highs, meaning it consolidated. During the consolidation, it left equal highs, which means it left an area to where people would kind of consider this resistance. And so whenever it comes close to this area, you're probably going to see a lot of, well, let's just say the price action will go through it many times up and down through that area to confuse people, to get people to either chase it, thinking it's going to go higher, or people are going to sell it, think it's going to go lower because they think it's a true resistance area, when it's actually not. It's what I call a liquidity point, or there's a liquidity pool above it. There are retail traders who have orders in the form of sell limits right around in this area. So whenever it gets close to it, it'll sell. For futures traders, for people selling CFDs who have that ability. And they'll probably put a short, stop loss on it, because I think whenever there is a resistance area, a resistance line, it's a very hard, solid line, and nothing, is, impenetrable. Nothing can get through and nothing can get out, which is a very flawed idea. It'll easily, and I've said this through many of my videos, if you've watched any of them, it'll probably come close, and then sell off, make people chase it, and then buy up into it. And then there's also a form of buy stops resting in this area as well, for people waiting for a breakout. So they'll think it'll, bust through here and then come back and test the same area and then move on and break out. When instead you're going to see a bunch of going back and forth, it'll sell, bust through. So now the people that sold will probably switch directions. As it busts through, the buy stop people will be happy that it's starting to go, but then it'll turn around and go back on them, and then it'll either go through their stop loss, and then the people that started chasing it will start chasing it again. So now you have two people chasing it the opposite way, going down, and then eventually possibly heading upward. That's generally what happens. How far off it gets, it's, it varies every time it happens. Let me see if I can find an example of this happening. Here we have some equal highs here. This red line is this right here is a fair value gap top premium. So I'm gonna delineate this just a little bit, so we know what it is compared to everything else. I'm gonna put FVG with a P, so premium meaning, well, it's actually at a discount, because it would technically be over here. I'm gonna leave it as premium because it is the higher price. So whenever once you get into premium prices, people like to sell. So I'll leave it as a premium because it could be an area to where once it hits that area, it fills that fair value gap and it could sell off. Anyways, I'm trying to find equal highs and what happens whenever those equal highs are broken. Here we go. Here we go. See, we got 3 equal highs here. And as you can see, boom, it didn't really play with, this is an hour. Let me mark this actually. Okay, and this is June 22nd. I'm gonna do 15-minute and come back to that area. Oops. So it was right here. So, not for sure what these yellow lines are right now, and if they have, I'm sure they have some kind of significance. I need to label things more whenever I do this. These were all order blocks as it was coming down. I was trying to see if it, and it, as you can see, it did bounce off all those. I was trying to see if it would bounce off some and then try to make it higher so that I could break some kind of market structure, so then it would go higher. But as it kept going lower, it kept going lower, and it didn't break structure at all. But it finally did here, and it went a little bit higher, and then of course we got to the bearish order block and then fell and went lower. But anyways, we're talking about equal highs, and I'm just going to move this. So here we have somewhat equal high. So this would be one of those areas to where people will consider it, you know, kind of a resistance area. So, and instead of stopping before it and falling and let people chasing it, it looks like this one just ran right through. So the people that had sell limits and probably short sell stops, and what time did this happen? 10:45, 8:45 at night. May have not even known it happened, and then next thing uh, they're checking their phone before they go to bed, and they had probably lost, some money if they had, put some kind of trade in place at that area. So it runs through it, and then it kind of breaks structure again here by breaking this swing high. And then coming up into this fair value gap and hitting this bearish order block. Now I can see it hit this bearish order block. If I was to do a horizontal line at the bottom of this green line, boom, almost touches the very, it's about spot on. Let's see here. What is the price here? 34,891. What's the high here? This thing was, even though I could still see the high. I don't know why I moved that. 34,880. So it missed by about $11. Even though it looks really, really close. Is that what that low is? 34,890.1. This is 34,880. So it's $10. Sorry, $10. Yeah, even though it looks like it's right on top of each other, it's Bitcoin. $10 is kind of like 10 cents in the real world, or in other trading things, or other trading equities, or coins, or whatnot. So, okay, busts up, consolidates. So then you got people probably chasing it until it hits this order block, which people don't realize it's an order block because nobody pays attention to smart money and knows what it is, which it is the last up candle before a down move. The bottom of that candle would then be considered the start of the order block. And then the top of that candle, it should not get any higher than that once it does come up and touch it in one move. So that's what happens. It comes up, even though it's $10 away, close enough. Algorithm's the algorithm. It knows where it's at. It knows where it needs to go. If we wanted to try to look at it a little bit closer and go across over here, yeah, I don't think what was low as this. Okay, so the low of this, which was, I don't know if I went to a 4 hour, if this would be the start of uh, an upward order block. But the low is basically the exact same price as where that price touched. So low here is 348.79.9 as to where the highest price before this, or the highest price that it hit, was 348.80. So it was literally 0.1 away. So I'm going to put that there, and I'm actually going to remove this. So it is the hour. So if you get on the hour time frame, It's the very bottom volume part of the volume of that candle. So the last up move, right before the down move, right? So this would be your order block. Um, Even though this is the last candle, it's about even with this candle. Um, so it's technically not the last up candle. Um, I don't know how to kind of explain it. Both of these candles could kind of be tied together as well as one candle, considering, there's, I don't really know. It's hard to explain, but just think of it as one big candle, to be honest. So, I personally would have looked at the 15-minute candle and went off that one. But considering the price of this is, the high of it is 34,880, and the open of this is 34,904. This is 33,880. Yeah, no, it gets a little bit off there, doesn't it? But if you go to the 15-minute, either way, the idea is still there. I'm getting way into the semantics of this, and it's probably confusing people more than it is helping. So I am just going to drop this because uh, this wasn't even the part we were supposed to be talking about anyway. Um, okay, so it is. This area here we're talking about. So we have these equal highs, right? Um, it comes up and it hits the order block. Again, just knowing where the order block is or knowing what an order block is more helpful than anything than trying to pinpoint exactly where this order block came from. Again, it could have been this last down green candle. It could have been this. You see the red candle here, the last red candle, and then it hits the green candle, that the next green candle going up, that could have been the last up move, before the next down move. And then once it crosses that line, then it becomes an order block. And same for this green candle. Once it goes up and then it comes down and it crosses that, then it becomes the order block. So the next time it comes up and it gets near it or touch it or goes into it, usually there's going to be some kind of rejection, and that's what happens here. And it rejects and it goes down past where people would think it would. You can see it does it here. It bounces off of it to where people think it would be support, right? The people that had the buy limits would, eventually use that as a test and think that that would be support, and it would continue going higher, and they would catch a breakout. But instead, what happens? It goes back down into it, comes up out of it, goes back down into it, comes up out of it, goes back into it, and then comes up out of it. So that's what I'm talking about when I see equal highs, and what you expect to happen whenever you see these equal highs getting broken and you think this is a resistance point. It's not. It is an opportunity for the large institutions to take advantage of retail traders who think this is a resistance point. So they just go after them in any way, shape, or form they can by doing things like this. I mean, unless you're scalping, um, you know, which that would have been one heck of a scalp if you would have caught this at the bottom and got out at the top, or caught this as soon as it was going up, and then got it at the top here. And pretty much the only way that you can do that is if you really understand smart money, and you can understand the algorithm, and you understand where it's possibly likely headed toward. And if I would have saw, if I was, if this chart was going down and it was around here, dipping back into this monthly fair value gap again after it already went all the way through it, I would definitely be looking at some kind of long opportunity, just because you've already went through the fair value gap, right? It's everything is balanced now, so that's what that means, the fair value gap. If there is a fair value gap, it means there is not a lot of liquidity that has went through the area, which means there is not a lot of balance. So now that we went down into it and then came back out the other side, means that we've had some pretty good balance in this area, and for it to try to come back down inside of it again, I wouldn't expect it to try to go lower at that point, because it had already came back up outside of it, and made equal highs. And once you see these equal highs, that's when I start thinking, okay, there's liquidity resting above this. This is an opportunity for a long. And then the next thing is well, where would you go long? Where would you actually look to go long in an area like this? First would be to look for, especially after it made those equal highs. Would you go long here? You could. You'd be waiting a while. But I generally wouldn't go long immediately after it follows and touches a fair value gap. Or maybe I would. I'm not gonna lie to you. I probably would do something like that. Just because I know that eventually it would get above those highs. I would be willing to wait and wait it out, just to see the profit on that. But I would also be entering more positions as it came back, because the thing is that if it did fall, right, what you'd have to do is you would also have to look at, well, did it create a other block, as I just like to call them blocks, because there's multiple blocks. There's mitigation blocks, there's breaker blocks, there's order blocks, and they all kind of fit the same criteria. And you just have to watch to see if those form, and when they do form, wait for the price to come back and touch those areas. So if it comes back and it touches here, would I go long at this area? Maybe. It could be a yes and a no. For one reason, it could be a yes because here you have a red candle, right? This I move that a little bit. I'm going to zoom in here so we can really start talking about this red candle here. That one right there. It comes back and the price action for it is about halfway into that candle. Now, why is that candle interesting to me? For one, the candle next to it is bullish. The one before it is bearish, and the bullish candle actually exceeded the body, so therefore it became a bullish breaker. So once it goes above the bullish, or once it goes above this bearish candle, becomes a bullish breaker. So then if this candle comes back down inside, generally what happens is it'll touch the top of one of these like this one did, and then it'll continue moving forward. This one came back a little bit further into it, but still the same idea. As long as it doesn't get below the actual candle, then more than likely it's going to continue to move upwards. If it does break that candle, then it is no longer a bullish breaker, and then I would expect lower prices. So now you have a bullish breaker. This pulls down, and it comes up. This, even though it's, I guess it starts off and it goes up, it comes back down, it loses a little bit, but then it goes back up again. So then you'd have these three candles, even though you have a red one in the middle of it. We're on a 15-minute chart here. You have 45 minutes of consecutive of time that reach above this candle. So therefore you have another order block. So now now that you have another order block, now you're hoping that price continues upwards. The price may come back down, but as long as it doesn't reach below, I would say, this candle, but and for all intents and purposes, considering there was a red candle in between there, you could watch for this red candle too, and then once it hits that, or even if it hits the top of this and then continues moving forward, that's what you want to watch for. You want to keep seeing it hitting these order blocks as they form, and then turn around and move bullish, and then now why does it stop here and turn around and go backwards? Well, I would say primarily because it wiped out this one probably took out a little bit of liquidity from here. So anybody that had buy stops resting above this guy took and then pulled it back down with them. So again, equal highs, they're close to equal but not exactly equal. But any kind of liquidity that's resting above this guy would have took and then brought it backwards with him all the way down. And then so now this one is higher than this one, and I know that this one's higher, but I'm sure that's what these people were probably aiming for as it was going up. But instead, it breaks this liquidity and then stops and then pulls backwards, as to where most people would expect it to try to keep moving and get above this. So there's where the smart money comes into play. At least it breaks this liquidity, but it stops just before breaking this liquidity, creating more equal highs, creating more liquidity in this area, right? So now that it bounces back, right, so it comes back, would I enter here? Yes, I probably would have entered there. And then I would have watched, and I would have waited, and again, you have this bullish order block that it fell into and it hit the bottom of, and then it moved up from there. So I would have thought that would be a good thing. But then you got to think, well, now you have a somewhat of a bearish order block now too, because you have these green candles that have been moving upwards, and the red candle actually broke the plane of that green candle, causing this to be a bearish order block. So now that it runs up into this green candle, expected, to kind of reverse and go back down again. These charts are basically a battle of order blocks, breaker blocks, and mitigation blocks. And how do you determine who wins? It's basically based upon where the liquidity is. Where the liquidity is and where the balancing is. If you're on side, if you're not on side, if you're offside a little bit, which means you're offside the balance, then it could, start going a different way, looking for liquidity in a different direction. But in this case, there's definitely equal highs here. So, but even though it keeps pulling backwards, I still have my eyes on this because I still think I would still think it would break that. And each time it would get lower, I would probably add in another, another position. Now, here, interesting thing about it getting here, and why this probably was the catalyst that made it take off, was because of these two candles, right? So this candle has a huge wick on it, right? Comes back down, and then you have a regular candle just after it, and then another regular candle. So this kind of comes back down and redelivers some balance to this area because of this wick. So since it comes back down and hits this wick, of course, in smart money, you cut through candles. So you hit this wick, now you're balanced in that area, right? So as you can see, kind of makes just kind of like a half circle, right? And not only that, it cuts through these wicks, and you're basically almost completely balanced. I personally would have tried to see if it would have got a little bit lower into this area right here, to see if it would have created another fair value gap and then take off. Like right there. But knowing that there's this huge wick here and you have a smaller candle here, you'll find a lot of these in your charts as well if you go back and look through them. I forgot which one it was, but this happened on a monthly, and I forgot which coin. Oh, it was on Ravencoin. Ravencoin, this happened on a monthly to where you had a huge spike, and it dropped down into kind of this same area. So whenever you go through your charts and you see a huge spike, and the next candle is just another bullish candle, and then the next candle is just another bullish candle, don't be surprised if you see it come back to that area to where you see that huge spike and it meets that regular candle, because I've seen that a lot in charts. And so of course it hits that, and then at that point, that's when it takes off. So at this point, I probably would have entered about 4 times, knowing that it's going to cross this plane, and then seeing where it gets. I probably would have been looking to get out just, I'm going to go here. I'm going to get rid of this yellow line now. But as you can see, these three, it's 4 candles, so that's a whole hour going up before it breaks down. That would be, you know, another order block I would be looking for it to get into before taking profits. So I would know, I would be looking for it to get above the liquidity area, but also looking left to see what is next, what is going to stop it from keeping to go higher. And sure enough, it gets all the way to the top. So this candle didn't even matter. It got to the very last 15-minute candle. And then what is the opening of that candle? 34413.2. Let's see what the high is here. 34,400, and here you have the opening of 34413. So let's go down to the wick. The low here is 34,314. As you can clearly see, it is now went through that, even with the wick. So even though this is where it starts, the actual order block, like I said, always look at that last candle and hope you can make it there, because that's going to be your bread and butter. That last up move before the down move, and then take profits there, and boom. I mean, so me personally, if I had been paying attention, or because I think at this point I was doing a lot of Ethereum trading, and I wasn't paying attention to Bitcoin as often. And also, I'd like to mention the Williams percentage indicator. As you can see here, oversold. Here, even though it kind of gradually goes down, then all of a sudden it's oversold. Then all of a sudden it's undersold. I actually have 2 Williams R percentages on top of each other. One's at 90, and this one goes to 10. Whenever it should be 20 and 80. So I'm actually going a little bit further extreme here. So this was pretty much very undersold. Whenever this is usually where my cursor is usually the undersold condition. So now it's extremely undersold. We're getting back to that area, you know, that I was telling you to look for balance, and then as soon as those two clash, boom, it takes off. And also you see that on the Williams percentage. So I use this Williams percentage in congruence with you know, watching smart money, watching the price action delivery, and seeing if I can catch a big move. Because just seeing this move across, and that's also why I have 2 different time frames. So I have one set at 14 and one set at 29, because the 14 is the one is that its default is set to. I also like to set one at 29 to give me a little bit further of a reach to see when things come together when they're going to be explosive. So as you can see, you know, they were together here for the most part. And then at this point, you can see that the I forgot exactly what this measures, but it's kind of like the intensity. The intensity, you know, immensely drops, and then, you know, moves on as to where here the intensity is kind of just slowly dropping until they finally meet at an undersold condition at an area to where it would balance to drive it up over the liquidity area. Yeah, whenever I say liquidity, well, I guess I should not use, well, you could use the dollar signs or the tether sign, either or. But yeah, well, that didn't work now, did it? There you go. You got Bitcoin resting above both of these areas. And so now you're looking to take that. So boom, it takes off. There you go. And then what did you hit? You hit the bearish order block and take your profits on that. And then just from the main point, let's say if you actually did hit pretty much the bottom to the top, it's $2,696, a good 9%. That is quite a bit of money that you could have made. And if you're like me and you're not scared to go in multiple times, it would have been another 6%. Oops. Another 7%. I don't know if I would have won it. Yeah, I may have won it again there. Who knows? And then you go, it would have been another 7%. So 6, 7, 7, it's 20 plus 8. That's an extra 30 just from trade, from entering in multiple. That's what small equal highs, treat them, and about what to look for in them. How I got on that subject was because, well, because Bitcoin made equal highs, and that's why I wanted to talk about it. So now, again, now that we've, I think Bitcoin, like I said, I think Bitcoin has had its rest. Or at least it's made some pretty low attempts here. It's interesting. I kind of knew it's. I see this wick, and I see people that who went long, and who probably went long early, and or at a different point, or at a, you know, maybe in here. At the right time, but they stuck their stop loss right underneath this guy, and they thought, oh, this has got to be support, nothing can break through this. And it comes down here, it doesn't, you know, it touches it a little bit, they're like, yes, I'm safe. And the next thing you know, boom, this wick just goes right through it. This is why whenever I am trading, and something like this does happen to me, to where I will enter a trade early, or I won't take profits at the right time, or I do take profits at the right time, and I'm trying to let the trade play out, and instead of putting the stop loss above, I'll still leave it below, just because I may think it get below and pick up some more orders before it goes ahead, just like it did here. then whenever it gets close to, you know, kind of that area to where people think is a good, safe area to put your stop loss at, know that this is probably going to happen. And whenever it gets close to it, I remove my stop loss. I do. I really do. I mean, I probably would have had my stop loss here for most of the time anyway, in case it got like way up here and then some freak accident happened and it fell and it, you know, it was gonna fall, you know, $8,000-9,000 or something like that. That's what that stop loss is for those kind of freak accidents from happening, and you know, so it doesn't just run through it. But if it's slowly coming down and getting into these areas to where you would put a stop loss, I am personally removing it until I know more information, because then of course it would wick right through it and then go right back up. And then what, you're out and you've been in this trade for, let's just say you got in here, right? And you took off 50% here, you know, or something like that, because you're waiting to get out at these highs, you know, and you thought this was a good area to enter. It's inside of the monthly fair value gap. There are breakers in here, so there, I mean, this whole area was a good place to start a trade. I'm not gonna lie. Plus, I believe, if I'm not mistaken, yes, there is a breaker over here, and I actually did trade here, so that's why I'm saying some of this. I didn't get in on this, and I got out. It was, yeah, probably, I don't know if it was this spike or it was coming up on this spike, but I think it was this purple line as to where I got out, and that's why I have this purple line here, is to mark where I got out. I didn't, not totally out, I should say. 75% of my position I took out, and the reason and I think it was here, and the reason it was because we saw the spike, we saw this, and it didn't get any higher. And then I think that's when I got out, was because it didn't push higher than this, and it started retracing. But then I saw this, and I was like, oh no, I made the wrong decision. But you know, as it kept sliding down, I was like, okay, I'm fine. Kept 25% on. And even as it got all the way down here, I knew it was eventually going to pick back up soon. So again, once it got down to here, I removed my stop loss. And I am now back at I'm just about above from where I started the trade. I started the trade when it got to the bottom of this breaker here. And on this second one, so it was actually like right in here, or at least that's where I set my limit for. And I saw it hit there, and I said, well, if it's gonna come back, it's probably gonna hit the bottom again. Set my limit, and I went on. So now what's going on with me? What is going on with Bitcoin? Well, as you can see, I didn't add any, even though it got all the way down here. Even though I still had 25% of my position on, I didn't add any more of my position on, because to be honest, if I was to add more of my position and it came up and it was to go lower, I probably, and I didn't get out in a timely fashion, it would have been all for nothing, because I probably would have lost, a good portion of that. So instead, what I did was I waited until it did this. So here we have, it came up, and then it went down, and then as this green candle came up and broke the plane of this red candle, I knew we had a bullish order block. So to me, this right here is basically when Bitcoin changed directions. So I didn't know if Bitcoin was going to change directions, and I was waiting for some kind of confirmation for me to know that. And this was the confirmation. Whenever we had, it coming up, you're thinking at least a lot of people, especially me, I'm thinking, okay, it's probably changing directions, but I had no confirmation. I didn't have any kind of confirmation it had changed direction yet until this point, until it dropped, and then this green candle came up and broke the plane of the opening price of that red candle. At that point, then this became a bullish order block, and I knew that we had changed direction at that point. So I generally, whenever that happens, I'll wait until we get about 50% of a retraction of the green candle, and then I'll enter. So I did have another position that I did add, and it's somewhere around a year, around 31,705, I want to say, something like that. So added another position there, and now I'm just hoping it gets higher. So anyways, I know that was a lot of talking, and I hope you got something out of that. I wanted to talk about equal highs and what happens, what do they mean in the smart money system, what to expect around them, and also change of direction confirmation. How can we know that? Well, at least this is a temporary change of direction. I will know more once it gets up. Well, I guess this pink line here, if it crosses that, right, and it probably will cross it, and then retrace a little bit, and then continue going. Hopefully, that's what I'm hoping for. But we could honestly get to that point, and then that be the end of it. Considering I did have 25% of my trade in here, at another position in here, I am going to take another chunk off once we get to this opening here, because this is a fair value gap. So we could enter it. It could get up to the bearish order block, which would be this green candle right here, and then continue on downward. I don't know. I don't have all the answers, but I do know that right now we do have a temporary change of direction, that we are going upwards, and I'm waiting for it. I'm waiting to see what's going to happen. And it would basically, I'm waiting to see what's going to happen whenever it hits this blue line, right? Or if it gets above this blue line. Or honestly, it would probably be right here at 100%, because 100% would probably be at the very bottom of this. Well, actually, let me see, what is 100%. 32, 4, 32,462.3. What's the low here? 32,470. That's the low. 32,470. This is 32,462. Okay, so there's about $8 in between the 100%, and so it would be somewhere around in this area. This is what I am going to be looking for, as far as getting out, or not getting out, but taking out at least another bit of profit before adding in another position, and then continuing on, hopefully to get above those equal highs I was talking about. So maybe that was what one of those lines is for. I don't know, but this is where I'm going to be looking. I don't know what this is. And then here you have some equal highs here. Probably take another percentage off there, 10-20%. Probably not too much, because just above that is the highs that I am looking to take most of my position off, right? And I'll leave a little bit of it on, see what happens. Falls back, makes another formation that I can add a position that's going to give me confirmation that we're going to move upwards. I'll continue, and then I'll be looking for this area to move into. So all right, so first area that I'm looking at, 32,449, 32,450, somewhere around there. Second area is going to be around 33,175, and then last area, or at least take profit 3 for me, was going to be 333, probably 333.20, somewhere around there. Or 333, right? 3333, just 4 threes and a 0. How about that? Probably that area. That's going to be where all those equal highs are. And then I'll have a little bit left on, and then let's hope we can get all the way up to 33.8. That would be great if we get up to 30. It'd be great if we get up to 33.8. That rhymed. Anyways, that's it for me, guys. I hope you learned something. If you did, what I'd like you to do is do something for me. Hit that subscribe button, hit that like button. Hopefully I can teach you how to read more into this. I just try to go a little bit by a little bit as I can, to try to get you to understand what these blocks are and what they mean. Again, it's all about, going one direction and then another, and then breaking the plane of that candle, that of the direction that you were going in. All constitutes the same for these blocks. Order block mitigation and breaker. It just it all just depends on kind of how they, or where they're at in a wave, I guess you could say, is what constitutes them as what. So that's it, and I am gonna see you guys later. Let's hope Bitcoin keeps going, and I'll review this tomorrow. How about that? I am way too close. I need to be more like that. There we go. Sorry, I'm all over the place here, but yeah, anyways, just keep your pants on. All right, guys, that's all you gotta do.